Hello and welcome to the next episode of the Primest Propositions vodcast here, the Lion Roar. I'm Matt Brown, Head of Mortgage and Protection Proposition, and I'm joined as usual by my wonderful colleague, Nikki Hemmings, our GI Proposition Manager. Hi, Nikki.
Hi, Matt. Thank you again. These are getting good, your introductions. Welcome everybody to a new episode of Hear the Lion Roar.
Good stuff. We're well versed now, Nikki. So
Yeah.
We've got a cracking guest on today. So we're joined by a national account manager from West One. We've got the delights of Jez Quinn today. So welcome to the vodcast, Jez. How are you, mate? You okay?
Absolute pleasure to be here with two industry heavyweights such as your good selves, and for the great Primus. So delighted to be here.
Very kind, Jez, very kind. So I guess before we get chatting about West One and what's going on in the specialist lending world, tell us a bit about you. You've been around the industry for quite a while, mate. So let's hear about Jez Quinn.
Yeah, so I don't know if that's a good thing or bad thing, been around a bit. But so I've been with West One since February. So before that, when most people will know me from, was Mast Haven. I've been there about 3 years as BDM in the Midlands. Prior to that, was at Secure Trust. Before that, where I cut my teeth and I was for donkey's years, was the West Brom. But I've joined at West One now in the buy-to-let division, with quite an interesting role. So I'm national account manager. I've probably got about half a dozen clubs and networks, national accounts. Obviously, Primus being my main network, which is fabulous. But we have a bit of a key account structure here as well. So I probably have about 30 or 40 key accounts I look after. And then I'm also still responsible for the Midlands. Now, I use the term Midlands loosely because it's anywhere from kind of North Wales over to the Suffolk coast. So it's not actually the Midlands, it's the middle of the country. But I'm responsible for that along with one of our BDMs in the office. So quite a mixed role, but good nonetheless.
Fantastic. And obviously, Jez, I had the pleasure of meeting you at our specialist lending events as well, over about a month or so ago now. So, and obviously saw your presentations. I learned quite a little bit about West One as well. But for those who didn't attend, tell us a little bit who you are, what you do, and where you are within the market.
You're going to get me in trouble there saying you just learned a little bit about us. You should have been, I learned loads about you.
So much about West One and specialist lending, Jess.
West One, it's an interesting one because when I'm on the road traveling, doing events like yours, and you'll have heard me say, what I get a lot of is, I've heard of West One, but I don't really know a lot about you. So to give you a bit of an overview, so West One are part of Enra Specialist Finance. That's our kind of our parent group. Within that group, there are a couple of master brokers. So there's Enterprise Finance, and one you guys and your listeners will be familiar with, which is Vantage Finance, who are on your panel. So they're within our group package as master brokers. Then we have the lender, that's West One Loans. Now, West One Loans itself is kind of geared up to be able to transact at all life cycles of property. So we're kind of, at the minute, we're kind of split into three. So we've got kind of bridging and development, massive player in the bridging and development space, probably got about 15% market share. It's what we originally did. So it's kind of probably, don't want to say it's the bit that we're best at, but it's certainly the bit we're best known for. Then we've got second charges on both buy-to-let and resi. That's run separately. Second, again, really long established. We've just won Best Second Charge Lender at the Mortgage Strategy Awards. So that's them saying how good we are, nothing to do with me. But
whoop, whoop. Well done, mate.
Happy days. So we've got two really well-established areas of the business. Now, buy-to-let is the most recent addition to the kind of lending suite that we've got. Buy-to-let launched in 2019, soft launch. I think we launched with you guys October last year, something like that. So we're not even 12 months on panel with Primus yet. And that's our buy-to-let proposition, where we kind of sit in the market. There's levels to specialist buy-to-let, right? So, and West One, one of the things that drew me towards West One was the proposition so vast and diverse, and we compete at all areas. So we want to be the first lender you come to when the high street's saying no to a buy-to-let deal. We can lend you a flat above a chip shop. we can lend you a massive portfolio for a high net worth client. So when we want to be your first option, so we've got products that are geared up to cater for that, but also the other end, the real complex end where there's very few lenders operating, we operate there and operate there really well as well. Cool. So we're everywhere. We operate everywhere.
Sounds like it. Absolutely sounds like it. So where do you see the majority of your business coming from?
Do you know what? That changes. I think it changes depending on what time of the month it is and where pricing is. But we have within our product suite, we've got 2 product ranges, and then we've got some criteria specific products, and then we've got a bespoke range as well. I would say at the minute, the standard range is we've got the standard range, specialist range. Standard range is probably where the most business is coming in at the minute. We've just launched an absolute stonking product again, asterisks. These products may not be available. I don't know when this is going out, but we've just launched like a stepped tracker product that's got that's linked to the base rate. Obviously now everyone's running towards fixed rates because rates are going up, but this is priced at probably near enough 2% lower than where you'd be at for 5-year fixed at 75% loan to value. Got no early repayment charges on it whatsoever from day one. So that's proven a really, really popular product at the minute, and that's probably where we're seeing the lion's share today.
Nice. What about your specialist range, Jez? Tell us a bit more about that.
Yeah, so I always refer to the specialist range as the sexy range because this is probably the most all-encompassing range that we have. So the specialist range would be anything from HMOs and multi-units. So HMOs and multi-units in this range up to 6 bed or 6 units. We can consider more and larger ones, but up to 6 and 6 on this one. Flats above and next to commercial. So we just alluded to a flat above a chip shop. We call them smellies. So the non-traditional type of commercial that lenders don't typically like lending above. So things like late night opening hours, shops, restaurants, takeaways, pubs, laundrettes, hairdressers, beauty salons, that sort of thing. We can look to get comfortable with them as well. Now, I always chuck out the warning there that we're probably going to limit the loan to value if it's going to be a smelly versus a non-smelly kind of office-related estate agency or solicitors. You'll probably be at 75% there. What's good about West One, so because of the amount of bridging and development that we do, we have a team of in-house valuers that work for us. They would review these type of commercial. There's a few things that they review for us, one of which would be flats or properties near commercial or flats above commercial. So we have the ability to refer that over to them, get a relatively quick turnaround of probably 24 hours to say, look, yeah, I'm comfortable with that to 70% loan to value, 65, 75, whatever it is. That's better than a subject to valuer's comments, because what we're not going to have is we go and value it and the valuer comes back and says, oh no, this is above a Tesco. And then we're kicking it out. We already know it's above a Tesco. We just want to understand from the valuer structurally, how is it? What's the desirability in the area and things like that. So you're not going to be hit with something we've already aware of up front. So that's quite nice. That fits in, and we're quite popular for that. The other thing we look at in our specialist range are hands-off corporate tenancy agreements. So these are things like Serco agreements that would house asylum seekers, but they can range to anything. It could be housing association for vulnerable adults, a wide variety of charities, anything from like ex-offenders to homeless to victims of domestic abuse. It can be anything, basically. We can get comfortable with these as well. Now, there's a couple of bits we need to make sure that are in the agreement in the first place. So, for example, we don't want an agreement any longer than 5 years. We need to make sure there's a break clause in there in favour of the landlord no longer than 6 months. With no conditions attached or anything like that. Can't be staff on the premises 24/7. Social workers or carers nipping in fairly regularly would be okay, as long as there's not someone there 24/7. So we can do that as well. Now, what else is great about the specialist range is it's open to first-time landlords. So we can do first-time landlord HMO, for example. As long as we don't do first-time buyer at the moment, but we'll do first-time landlord. And we can do a combination. So you could technically look at a first-time landlord doing a multi-unit block above a commercial that was going to be let out on a hands-off corporate tenancy. Now, as soon as you start putting them layers in, the lenders that are out there in the market that would be able to support dwindles, and that's where we become particularly competitive when you start to layer in problems or complications.
Good. Thanks, Jez.
I'm sure you agree.
Well, my ears have pricked up, and it isn't about your sexy range or your smelly range, you'll be pleased to know, but it was about your larger HMOs. So we get loads of questions through experts about HMOs and larger HMOs. Can you give us a bit more info around what you're doing on those larger HMOs?
Yeah, of course. So I think I mentioned earlier, we've got some in our product suite. We've got 2 ranges, and then we've got some criteria-specific products, and then we've got the other stuff that we do. So within the criteria-specific products, we have large HMOs and large multi-units. So this takes off where specialist leaves off. So obviously, specialists up to 6, this would take over at 7. This goes 7 up to 10. This is where we can start to look at bricks and mortar, commercial valves rather than bricks and mortar valves. And again, with these, we ask them to be referred into us so that we can get our valuers to comment on them, just to make sure we're going to be comfortable at 75% loan to value. But also within this range, we have our short-term let range. So that is, these are all what they say on the tin. So short-term lets, Airbnb and holiday lets. We're comfortable with that. We're comfortable with that for first-time landlord as well. We do work off a normal AST for rental coverage. And the final thing that we have in there is we've got an expat range, which makes up the 3 criteria specific products that we have.
Cool.
Something you've just touched on there as well, and I know it is an area that our experts team get quite a lot of questions. What is expats? How do you look at expats?
Expats, so well, almost a traffic light system really. So expats are obviously a British citizen that now lives abroad, so it largely depends on where they're living. So generally speaking, if it's EEA, you're fine, so green light. If it's on the Financial Action Task Force grey or blacklist, now there are some EEA countries that would fall within that, but I suppose this is the book stops here. If it's on the grey list or blacklist from the FATF perspective, it's a no. So that will be countries like that are subject to sanctions and where there's very little regulation and there's a high chance of money laundering and things like that. Again, you can ping them over and say, Jez, where are they? And we can let you know. But then the amber, if you like, are the non-EEA, non-grey list or blacklist countries. This is where the majority of them come from. So this would be things like America, Australia, China, Singapore, countries like that. We can be comfortable with them now. For an expat, it's kind of really the one of the only areas where we don't do first-time landlords. So expats need to have a 12-month at least clean mortgage credit footprint in the UK. So they already need to have one. Now, don't get me wrong, that could be the former resi that they had that's now on a consent to let and they're looking to remortgage that because they've gone and moved abroad. But we need to be able to see on the credit file at least 12 months. Probably ask a few more questions. If it's non-EEA, we want to have an idea of what do they do for a living, what sort of savings do they have, that sort of thing. But we generally can be comfortable with them. And again, you've got myself and Ali, who's the telephone BDM, as well as the rest of the team on hand for your queries to say, look, here's one, it's by referral if it's outside of the EEA. What do you think? And we'll come back to you quite quickly on it.
That's brilliant. I think the experts team will be happy to know that.
Yeah.
We'll pass on your details to them straight away. Thanks, Jez. Something else that you've also mentioned about is the your bespoke range. What do you mean by this?
Yeah, so the bespoke range is kind of, it's the one I like talking about the most because this is it's probably generally the more interesting sort of stuff that we get. So we probably do, 25% of business on a bespoke basis. So bespoke purely means it's off product guide, so it's too complex to put it on the product guide. So we're going to bespoke price it for you. This could be anything from large value single assets. So our product guide on the standard range, you'd be at 75% loan to value up to 1.5 mil. We can look at up to 4 mil on a single asset of a loan size. Probably limit your loan to value if you're going up that high, but you're going to pay a little bit of an increase on the product guide. Large portfolios, so portfolios across the range. I suppose generally up to 3 mil, up to 20 properties. You're pretty much on product guide, but we can do up to 7.5 mil portfolios. Again, when you're looking at that, there's going to be an element of bespoke pricing for the larger portfolio stuff. We can look at large block exposures. So we can look at a lot of lenders will limit their exposure in leasehold blocks. We can do 100%. So again, if we start to do 100% of exposure in them, it's going to be bespoke price. Foreign nationals, we bespoke price foreign nationals. Foreign nationals probably got the biggest range where we'd be at. So obviously there's varying degrees of a foreign national. It could be someone that is from abroad, living abroad, that's got one property in the UK already. So a Chinese national living in China that's owns a property in the UK. Or it could be someone living here on a marital visa that's married to a British citizen that's got a resi here, works here, got a couple of buy-to-lets here already. So we'll bespoke price all of it, but expect the latter there to be a bit cheaper than the former, depending on the range. And then really any other exception to policy. So I said we're looking at HMOs and stuff, and so we got up to 6 on specialists, up to 10 on the large range. Doesn't mean you've got an 11-bed HMO I don't want to hear from you. I do. It just might be that we're going to bespoke price it for you because it's strictly an exception to policy. So yeah, really, the bespoke range is kind of like a real exciting one for us.
Excellent. I can see you get excited about it when you talk about it there, Jez. Just so obviously, you're passionate about it, and there's a lot there that you've said about it as well. But bespoke products, does it automatically mean a jump in price?
Well, yeah, it does. I mean, it wouldn't be as much as you think, though. I mean, I would. It doesn't mean it's going to go from being reasonable to ridiculously expensive. Yeah. I've seen us do HMOs and multi-units that are above the 10 threshold, and we've gone, actually, we'll do it on large pricing. I've seen us do large value single assets at 0.1 higher than product guide. The general rule of thumb would probably be somewhere in the region of 0.25 on top of where product guide pricing would be. So I think it's when we start to bespoke it, obviously that it's ruling out so many lenders that you're in that sort of position where it's almost beggars can't be choosers. Yeah. But it's not to mean we're going to take advantage of it. It's just you're pricing it to risk. So it's naturally it's going to be a little bit more expensive, but it doesn't mean it's going to suddenly jump off you hear the word bespoke, it doesn't mean suddenly it's going to be the cost of a Rolls Royce or anything like that. It's going to be still reasonable uplift from where product guide pricing is. That's all.
Cool.
But the cogs were turning a bit with me there, Jez. So before we hit record, you were chatting to Nicky and I about that case where I think you guys lent on was it all apartments in a newly converted block? It sounded pretty funky what you guys had done. Was that from the bespoke range? Yeah, exactly. So I mean, but we can look at it. I've got terms out on where we've got an office block that was converted into 44 long lease separate apartments, right? And we've given terms on lending on buy-to-let on all 44 of them, 44 separate loans. But if you imagine, keep it simple, look at like a block of 20. So someone's bought an old pub or something, converted it into 20 flats, all on long leases, and they want to retain them. Now, what you'll do is you'll speak to lenders, and lenders will go, right, well, we don't want to have any more than 25% exposure here, so we'll do 5 for you, or we'll do 4 for you, or whatever it's going to be. And don't get me wrong, we'll do 5 for you, and we'll do it on product guide pricing, and we'll do it to 75%, no problem, or even 80% if it's standard. But we would also do all 20 for you. Now, that is naturally going to be bespoke priced because it's a large block exposure. Again, it's going to be a portfolio of 20 applications. What's good with us is what I've just said is we treat that as 20 applications, not one application across the 20. Now, from an admin perspective, we can treat it as one application for you. So we can do one submission, one underwrite and all that sort of stuff. But ultimately, it's 20 loans. Now, that's great for the flexibility because if you've got one loan across the 20 and they see an opportunity come up and they want to sell 5 of them off and raise some capital to do another project, if we've got one loan across them all, you've got to come to us
permission. We can dictate to you a little bit. It's not as flexible. Whereas if you've got 20 loans, well, you do what you want with them because you take 5 off, not maybe ERCs on the product, for example, but it's up to you what you do with them because they're individual loans. So we can look at that stuff. But as I say, we can look at even more than we say 20 on our kind of literature and stuff, but we can look at more than 20. I've got one where it was 44, so it's nice. What you need to bear in mind is, it's going to be a bit of a premium to pay it because we're doing all 20, so it's going to be a bespoke price. You probably would save money splitting it up. And as I say, you'd save money with us because we'd do 5 of them on product guide. And you're probably going to be limited with loan to value a little bit because generally what happens when you're doing these sort of things is you put a block discount in. The valuer will recommend a block discount if you're taking such an exposure, which for argument's sake, if it was 10%, and say it was, just make it easy, so it's £1 million, 10%. So we're going to go, this is worth 900 grand now, not $1 million, and we'd lend 75% of the 900 grand, which works out at 65.5% of $1 million. So you get a blended 67.5% LTV, doing it with one lender. But if it's enough to pay the development finance off and give them what they want, and they want it simple with one underwrite, one lender, one completion, they're not having all the stress of other stuff, for realistically something that's not too much more expensive, makes complete sense to do it.
Okay, mate. Useful. Thanks for that. It wouldn't be a conversation in this half of the year if we didn't talk about the cost of living crisis and mention it somehow. There's a lot of noise about the cost of living crisis and the impact it's having on lenders with service levels, rates going up every 5 minutes, inboxes being inundated. And I guess, the question, if I was a broker sitting here, would want to ask you, so I'm going to be the voice of the broker, is how are you guys doing with your service right now? And, are you feeling the impacts that some of the high street are?
I think, do you know what? I don't think we are, to be honest. I think we've been through it to a degree. West One's underwrite and our process is very slick. It's the best I've ever worked with, probably excluding the West Brom, which was purely automated. But from a specialist lender, it's certainly the best I've worked with because we have a minimum requirements. Until the minimum requirements are in, which are quite clear and easy to service, it doesn't go in front of an underwriter. Then the underwriter looks at it, and there's no arduous document requests. We don't, like, for example, for a portfolio landlord, we don't stress the background portfolio. It just needs to wash its face. We don't ask for business plans, cash flow forecast, assets and liabilities, all that sort of stuff that some lenders do. So there's no arduous documents, and it's a very pragmatic approach to stuff, which enables them to get through decent volume. I think we've been through the worst of what we're going through purely because I think we're very commercial headed as a business. So I think when we moved quite quickly with the rate increases, which naturally when our peers haven't moved as quickly as us, have kind of put us out the market price wise a little bit. We've come back in it automatically because gradually they've caught up and then we've become competitive again. But what we don't want to be doing, because it just doesn't make sense for the sustainability of the business, is to be writing business that's going to lose us money, because just crazy to do that.
Sure.
So service hasn't really been impacted. If you're pinging me a referral over for something that needs to be referred in, and again, I get a lot of the stuff, even if it technically doesn't need to be referred in, because of the type of lender we are, you're probably going to refer it in anyway because it's more complicated than it would be. But myself or Ali will be coming back within hours rather than days. When we refer something to our valuers to do and this isn't like just going to the valuer, putting it in front of them saying, yeah, looks all right. They'll do a proper review of it. That's 24 to 48 hours, and then we're coming back. Underwriting requirements and are being reviewed within 24, 48 hours and have been. Obviously, offer times and stuff, not something that we publish. I think it's probably, you compare it to one of the mainstream lenders, it's probably a little bit misleading when you're a lender of the size, because some of them could take ages and some would be quick, but it would still look like how long they are. I don't know why we don't publish them, but we don't. But everyone that I've spoke to, probably a little asterisk by everyone, but there's 5 or 6 brokers that I've introduced to West One since I've started that have become good supporters of ours and are giving us multiple submissions now that weren't using us before. They've all had nothing but good things to say about the service. You can talk to underwriters, they've got common sense, the real desire to want to get the deal done. There is no business prevention unit, so to speak, that some lenders feel like they have. I'm waffling, but the moral of the story is this is good.
Good answer, Jez. Thank you. That's good. And I guess the final all-important question, really, to end, the vodcast today is: if people are watching this back and they like what they hear, what should brokers do if they want to find out a bit more or get in touch with West One? What do they do next?
Well, first things, register. I can't stress why it's so important to register, because I've never worked anywhere where stuff changes so quickly. So new products being launched, that step tracker I talked about earlier. I know, again, I don't know when this is going to go out, but we are looking at some limited edition exclusives to be launched in the next week or so, which would be week commencing the 25th of July. So you're not going to know about them unless you're registered, and then we can talk to you as well. That then means if you've got a case on your desk and you're ready to go and it's urgent and it's important because of all the other things that you've said, you're going to be able to use us straight away. But being registered would be the key one. But you've got myself, whose details I'm sure will be shared as part of this. You've got Ali, who's the BDM for the Midlands. If you're outside of that geographical area, it's not a problem. We've got fantastic guy, John Smith, former Masthaven colleague, who's joined us in the kind of southeast area, and then we've got a terrific telephone BDM team that kind of cover the north and southwest at the moment as well. So between us, you're well covered, and get in touch. I mean, I'm more than happy to jump on any sort of Teams call or come and see you face to face. Is my preference if you've got a team and you want to find out a bit more about who we are and what we do.
Perfect. Well, thanks, Jez. Really, really informative. I think we've covered loads there. So, I hope people watch this back and learn loads and loads about West One and get in touch with you guys. So thanks for coming on today, mate. And,
no worries.
We'll see you soon.
Thanks for having me. Cheers.
Cheers. Take care. Bye. Bye.